right? Market just opened. It's May 19th. We're trading NQ. I already marked my 4-hour or my high time frame confluences. So on the 1 day, we have a 1 day bullish fair value gap right here, a 1 day bearish fair value gap right there. On the 4-hour, we have a 4-hour bearish fair value gap right there. On the 1-hour, we have a 1-hour intermediate high right there, a 1-hour intermediate low right here. Actually, matter of fact, I think this one is this intermediate low is the 1 day intermediate low. This is the lowest point within this fair value gap sequence of these 3 candles: candle 1, candle 2, candle 3. And then we have a 1-hour bullish order block right here, and then a 1-hour intermediate low right here as well. So key liquidity levels have been marked. I already looked for an SMT on the high time frame. I don't see one yet. We'll kind of just wait. I'm hoping to get an SMT on the sell side, as opposed to the buy side, or sorry, the buy side as opposed to the sell side, because in a bullish market, especially at all-time highs, we're looking to take longs. So I want to see NQ ideally take out this intermediate low while ES doesn't. That'll be our SMT, and from there we can look for entries. Right now, price on NQ has entered that intermediate. One thing I am kind of overlooking right now or disregarding is the chance of market starting its downtrend, right? Us no longer making all-time highs. And for that to be true, I don't know. Like, here's the thing. Like, if I were to use Fibonacci and start from this uptrend to here, this would be the 50% and 618 range, okay? Which tells us that either A, price could very easily push up from here and disregard this Fibonacci, since it's, what, like 250 points below where price is currently at. 2,000. Yeah, 2,000 points. Or it could be that we want to take shorts and trade price all the way down here. That's a little difficult to gauge. So what we're going to do is just be reactive to price. See which confluences, bearish or bullish, price react at more. And the volume is incredibly high right now. We're at 280,000 for volume on the 4-hour. 15-minute, we're at 50K. On the 1 minute, we're at 8,000. So it's reasonable. It's reasonable. What I will do while price is moving on NQ is just mark any other high time frame confluences on ES, so that when price is at a certain key level on ES, I can kind of compare it to NQ, see where NQ is at that same point. And it just kind of helps you understand where the market is moving, not necessarily where to enter, but still pretty crucial information. And market's not doing much right now. Or, it could be. It could be. Here's what I'm thinking right now. Just from the sequence that I'm seeing, I'm thinking potential shorts, especially since, like, we've been quite bearish. Here's why. NQ took out previous day low, ES did not. When SMT divergence is created, it could mean one of two things. It could mean it's time to enter your main position, whether it's long or short. In this case, let's assume that someone saw a bullish SMT divergence right here and entered long. Sure, they'd profit a little, but I don't think that's the main move. B, it could just be that SMT is providing opportunity for one of the indexes or both to push up in the opposite direction, grab liquidity, and continue in the dominant direction. Knowing that the dominant direction seems like it is bearish, right? We create a bullish SMT. NQ enters this 1-hour intermediate high after the bearish SMT, and a 1-hour intermediate high, I mean, while you see NQ has a pretty fat bearish candle, I mean, granted, we still have 25 minutes left in it, but it's pushing. I think that there's some opportunity for shorts right there. And And on the 1 hour, you can't confirm that the SMT is completed because there's still 24 minutes left. Let's say that this low is taken out on ES in those 24 minutes, that SMT would not be an SMT. However, if you checked on the 15-minute, that SMT has completed, right? That candle has been filled. So let's see. I think we just wait at this point. We see if price reacts heavily to this fair value gap, if this candle body pulls down all the way over here, and presents opportunities for short entries, or we see if we break out above London highs, or I think that's kind of what I'm waiting to see. All right, you'll see, look, exactly what I wanted price to do. Candle bodies down here, large wick, looking for an inverse fair value gap break. I mean, we could look for that 2-minute inverse fair value gap, but I don't know how I feel about the 2-minute. I mean, look, we'd have to break this low right here for it to be an inverse fair value gap. We'd have to break that low. So let's follow that rule. 5-minute time frame, low right here. That is our IFVG break. We have a bullish fair value gap. After we see price in a 1 hour intermediate high, followed by after a bullish SMT divergence, all we're looking for is a regular bullish fair value gap to get inverted, meaning for price to slam right through it. And it did exactly that. Keep waiting, wait for price to hit that IFVG, and then we're good. And you'll see ES. ES is going to take out this low, guaranteed. By the way it's dumping, it's going to take out that low. So we know that the bullish SMT divergence has already happened. Price wants to move bearish. Now we'll just kind of wait for entries. This is, I feel like, a good bearish fair value gap for price to pull back at. And we'll wait. All right, we entered our shorts right here. Waited for a 30-minute IFVG break. So if you see here, sorry, not 30-minute, 30-second. This bullish fair value gap right here, candle 1, candle 2, candle 3, we inversed it with this candle right here, entered shorts immediately. Targeting, what do I want to target? Like, the safe thing to do is just target this low right here. Let's go for a 1-to-1 would be up here. Let's keep it at a 1-to-1. What I also like about this is, let me show you, is that if you go to the 1 minute for both ES and NQ, this is NQ, this is ES, you can see that we created another bearish SMT divergence within. So, I mean, come on, that's light work. That's easy shorts all day. You can see it from here. SMT divergence within a 1 hour intermediate high, or 1 hour intermediate high, exactly. 1 hour intermediate high, and then you have a 5-minute SMT divergence. At the same time, if you look at ES, you could see that we're resisting off of this intermediate high on the 15-minute time frame, this bearish fair value gap. So that alone will tell you that price is ready to short. We will sell right here. Traded 3 micros. The way I select my risk is from my entry point to my stop loss, I count the amount of points. So it's 97.5, even if I'm thinking to do this high right here. Let's assume this one. What's 62 times 2? 124. 500 divided by 124. I will typically round up, and that is 3, right? So we'll do 3 micros for that. And now we wait. Looks like we'll hit TP any moment. Very simple trade. Price in a 1 hour intermediate high. Clearly you can see candle body finishing below that intermediate with a long wick. Then you see a 5-minute SMT divergence, bearish in that zone, targeting. Honestly, I think I could target previous day low over here, or even previous week low, but to be safe, I will target this prior low, because that right below, like this low would be considered an intermediate high. It will generate buy side liquidity for price to move up even a little bit. And if I'm already 500 in profit, I'll take my profit at the prior low. All right, order just filled. I believe that was 600. That's it. Trading day's done. Quick 12-minute video.